everyone. So our group will present the institutions and market in the Islamic financial services versus institution and market in the conventional financial services. So this is our group members. So in this presentation, our group will explain more on the introduction, the definition of Islamic finance and conventional finance, the value proposition, the structure, the operational mechanism, and the instruments offered by these two financial institution services.
Assalamualaikum warahmatullahi wabarakatuh. Hi, my name is Siti Nazimah binti Mustafa. So for the introduction, Islamic finance, also known as Sharia compliance, it is financing that follow the Sharia, and it's also a practical implementation via the advancement of the Islamic economy. So there are several examples of the Islamic financing, which are hijabah, mudawabah, murabahah, musyarakah, and wadi'ah. Okay, next for the conventional finance. Conventional financing is a type of the home financing scheme that given by the financial institution or bank that is not insured by the government. There are also conventional loans that follow the guidelines that provided by the government and sponsor agency. At the last, this loan will be ensured that will trade in the secondary market.
Hi, my name is Novarisha Yuni and I will present about value proposition. Value proposition is the value that a company promises to deliver to customer whether they should choose to buy their products. It is a part of a company's overall marketing strategy. The value proposition of Islamic services is not averse to profit making. Its value proposition is more bringing benefits to the doorstep of their customers in a mutually beneficial manner through partnerships modes of financing. It firmly rooted in the Maqasid Syariah, traditionally involve ethical investing and green business. This takes into consideration the building blocks of the modern social investing such as ethics, environmental stewards, and customer protections. However, the conventional services geared towards consumer. It has friendly customer service meant to attract more customers with ingenious objective of profit maximization. It also involves socio-economic benefits for the consumer. There would not be any needs for socially responsible investing, which is gradually gaining sound as a part of the aftermath of the recent global financial meltdown.
Hello everyone. So right now we move to structure. So in this context, it refers to how a financial institutions organize or set up its financial operations. To compare between Islamic bank and a conventional bank, it is quite challenging because the structure of these two banks works differently according to their bank needs. Next, we move to the structure of Islamic financial services. So for Islamic bank, it is to be set up based on the theory of sources and application of fund, which is there is a single flow between the deposits and the investment or financing use of fund, which is mean there is no specific intention. Next, they also use the profit loss sharing structure, which necessitates the distinct approach to the bank management. However, not all Islamic banks do it correctly. And the most suitable application to Islamic bank, we call it as mudarabah. For conventional bank, the modus operandi would be like the shareholders would give the capital, and then bank would receive and use it for deposits and investment. And next, when the bank receives the interest, they would distribute the interest among their shareholders. And next, if customer requests for loans, bank would borrow from the interbank funds, and then they would lend the fund with their own rate of interest.
Assalamualaikum. My name is Ahmad Adamuddin and I will present the operational mechanism. Operational mechanism is a set of institutions, instruments, and markets which promote service and channels them to the most efficient use. Operational mechanism based on my Sharia perspective is Sharia law governs the operation modes. Bank must guarantee that all commercial activities adhere to Sharia requirements. Riba, gharar, and maisir are forbidden in Islamic finance. To guarantee that company activities are in accordance with Sharia regulation, each bank should establish Sharia supervisory board. Compared to conventional operational mechanism, operating modes are entirely man-made and secular concepts, with no religious or guiding ideas. Essentially, any commercial operation are permitted as long as they generate a profit. Liquor, adultery, and nightclub companies, for example, are permitted and legal.
Hi, Assalamualaikum. My name is Na'alian Abdullah Rashid, and I will present about instrument offered. Instrument offered is an asset that can be traded, or they can also be seen as packages of capital that may be traded. It is represents on asset to one entity and a liability or equity to other. For Islamic, there is four of it, which is suku, mudarabah, musyarakah, and ijarah. Suku is securities of equal denomination representing individual ownership interest in a portfolio of eligible existing or future assets, while musyarakah is joint enterprise or partnership structure in Islamic finance in which partners share in the profits and losses and enterprise. Mudarabah is sharing the profit and loss with venture capital, is a partnership or trust financing contract. Last is ijarah, which is contract for the hiring of persons or renting or leasing of the services or the usufruct of a property, generally for a fixed period and price. Okay, next, for conventional, there is bond, deposit, acceptance, and lease. A bond is a fixed income instrument that represents a loan made by an investor to a borrower. A deposit is a transaction involving a transfer of money to another party for safekeeping. Contractual agreement by an importer to pay the amount due for receiving goods at a specified date in the future. Last but not least, contractual arrangement calling for the lessee to pay the lessor for use of an asset.
So that's all from our group, and thank you for watching.